I honestly am still in the camp that we're still headed even lower, probably 12, 13,000 at minimum on Bitcoin. And just to be clear, that's kind of my best case scenario is 12 to 13,000. My worst case would be like 3,500 or so. So hopefully it's the best case. But again, as a trader, we always have to prepare for the best and the worst case. You just can't kind of stick your head in the sand and say, oh, I'm only going to believe in the best case. As a trader, you have to mitigate risk. So you have to prepare for the potential for the worst case.
Hello and welcome to Wealthy Value. In today's video, crypto analyst and the chief market strategist at InTheMoneyStocks.com, Gareth Soloway, updates about his Bitcoin outlook for September 2022, his updated prediction for the next leg of the Bitcoin bull or bear market, and whether he thinks the price will break up or break down. Gareth also reveals why emotion is your worst enemy in crypto. Make sure to stick around till the end of this video, where Gareth Soloway explains why he believes that a true Bitcoin bottom is yet to come. If you like the video, don't forget to give it a thumbs up, subscribe to the channel and turn on the post notifications. Let's dive right into the video.
So number one, it's been dead the last few days, right? I mean, it's interesting to look at the stock market, and for once we're seeing more volatility in the stock market. The stock market, the NASDAQ, the S&P, bigger bounces than crypto, at least in terms of Bitcoin percentage-wise even. So that's pretty wild to see. But I do think it's the calm before the storm for crypto. I do think you're going to get more volatility. I think there's a couple reasons why it's been so quiet the last few days. So number one, tomorrow we have Jerome Powell speaking from Jackson Hole. So Jackson Hole, for people that don't understand that, it's basically the place that all the Fed presidents convene. They go to Jackson Hole, I think it's Wyoming, and they all sit down and they powwow about interest rates, about the economy. And then basically Friday, I think it's 10 a.m. Eastern time, Jerome Powell's going to make a speech. And the market's going to be looking for that, and Bitcoin's going to be looking for that, or at least investors in Bitcoin. Is he hawkish? Is he dovish? Is he kind of hawkish? Is he a little bit more dovish? And whatever he says, you're going to see a reaction in the dollar, and then likely crypto will go in the opposite direction. So tomorrow is kind of like the party that everyone's been waiting for a few days here, which is why crypto's been so quiet. I think overall, also, the other thing is that there's a lot of investors that got burned in crypto because of Celsius and because of a couple other things. And so I think a lot of money has gone towards the stock market right now and has stayed away from crypto. In addition, we're waiting for like this regulation. Like, what the heck are we going to do? We know Gary Gensler says Bitcoin's a commodity, but what the heck is everything else going to be? What type of regulations are they going to bring in? And that's keeping a lot of money on the sidelines at this point as well. So there's a lot of things that are kind of keeping Bitcoin and crypto traders on the sidelines. And I think it's going to start to become clearer in the next week or two. And I think you'll get some more volatility. So I would favor a short-term move up maybe on Bitcoin in the next day or a few days, and then I think the resumption of the downtrend continues. So if we go to the charts here, let's take a look at these fun charts. Basically, what you have is you have a macro pattern, and I'll do a little bit of teaching for everyone out there. So a macro pattern is basically the bigger pattern, and then you have a micro pattern, which is the pattern inside of the bigger pattern. And what you could see here is basically we have, let me get my trend lines up here. You basically have the bigger pattern. This is your bigger pattern down here, and then sideways, right? This is in spirit of what we would refer to as a bearish pattern, in spirit of bear flag. And we've now broken down again, and now you're forming a new bear flag in spirit of bear flag pattern, right? So you got a macro bear with a micro bear. So you have two bears, which is never a good thing, right? So that's a little bit scary. But what I said before is that short term, I'm a little bit bullish, and this is getting a little bit more wacky. But look at this green candle here, and then look at this mini micro. And this is getting weird, right, Frankie? So you have a macro pattern, you have a micro pattern, and then inside of the micro pattern, you have this mini micro, which is a little bit of bull, right? So you have the up move and then the sideways consolidation. So what this tells me is that the market's anticipating maybe a quick move up, but then the bigger micro pattern and the macro pattern will likely take it back down. So I guess to summarize this, you'd look for a very short term, maybe a next couple days bounce in crypto, maybe if we're lucky back to this trend line that was broken. So this would be kind of a retrace to the breakdown line right here. And then I think we roll over and the resumption of the bearish pattern takes us down to here, which is the 2017 level.
A lot of traders are losing money on the falling markets, and cryptocurrency market is unpredictable, and the bear market could win over the bull market. So how can you earn profits in a bear market? Diversify your trading strategy by trading on markets and utilize long and short position. Welcome to Margex. It is a Bitcoin-based multi-asset trading platform. You can earn profits by opening long and short positions even in a falling market. BTC and other top cryptocurrencies are available at 10x leverage. There's no know your customer, and Margex has been nominated by Finance Magnets as the most user-friendly trading platform. Margex also features a killing MP Shield feature, and that's a system that protects traders from illiquidity and price manipulation, like the flash price crashes and the liquidate short or long positions often conducted on competitor platforms. Margex also gives you the exclusive bonus to try leverage trading without any of the risk involved. You can sign up on Margex in a minute using an award-winning interface. So to do that, just sign up on Margex. Make sure to use my link in the description below. Join the wallet section. Then you can enter my promo code in the promo code section, which I'll show you how to do that. You just hit use promo code and then go ahead and enter the promo code in that section. Then you get $100 free funds to trade and test your trading skills. Every Margex user can trade BTC, Ethereum, LTC, XRP, EOS, ADA, Uni, SOL with up to 100 times leverage. The minimum deposit is only $10 and the minimum trade size is $1. Margex users can pick between cross-margin and isolated margin for each trade. Cross-margin shares the trader's available balance among all open leverage positions that use cross-margin. To go ahead and open a trade using cross-margin, simply head to the Order Submission menu and click on the leverage method used, either using the pen or scrolling all the way to the left on the slider. As you can see, Margex trading fees are extremely competitive compared to other major crypto exchanges. The low fees are pretty amazing to behold, especially considering the MP Shield that makes trading much safer than other cryptocurrency derivatives and trading exchanges. In addition, it is possible to use 10 cryptocurrencies as a deposit position. Margex offers BTC, USDT, USDC, DAI, ETH, Link, WBTC, USDP, Tron, and Polygon as available collateral. So, what do you need to do? Let me remind you how the promo code works. Sign up to Margex using my link in the description. Join the wallet section, then enter my promo code in the promo code section. And then perfect. Get $100 free funds to trade and test. Thank you very much for watching this, and I hope it was helpful to you.
But for me, it would be much, much lower. Like, honestly, 10,000 would be very good in terms of washing out a lot of the weaker hands. So for instance, I think there's a lot of investors, and if you look at Bitcoin right now, you know, we just went from 69,000 to 17.5, and I still didn't get the sense, and you might agree with this, I don't know, but I didn't get the sense that people were like giving up on Bitcoin, right? And in a bear market, that's the kicker, right? If you go back to 2009 when the stock market bottomed at like 6,600 on the S&P or whatever it was like people just didn't even open up their portfolios anymore. They were like, I'm not even going near stocks anymore. But you don't have that in crypto yet, which to me says you got to go lower in this bear market if it's a true bear market. And so I'm in the camp that, you know, 12, 13,000 is the high end target. But in all fairness, it's very likely that the powers that be, the psychological breaking point is probably that 10,000 level. So I would say that you probably have to go even below that to really flush out all of the weaker hands before you get that final, you know, bottom being put in. And I would just point to this, is that I think we could agree that the crypto market in the last 12, 18 months, very similar to the dot-com bubble, if people read up on the dot-com bubble. And remember, Amazon lost 95% of its value. It went from, I think at the time, $115 to like $6.50. And then it went to $3,500. Like, think about from $6 to $3,500, what type of X that is. You know, that's like hundreds of, you know, 100X or whatever it is.
Yeah.
So you have to think that, Bitcoin could easily go down 95%, and then it could go up the same amount as Amazon if it proves itself to be that digital gold. So for me, I wouldn't give up on it myself. I still think that the fiat currency issue is not going away. The Fed right now is putting up that strong front. Oh, we're going to stop printing. Well, yeah, it's easy for them to say that when unemployment is like 3-4%, right? But ask me this: when unemployment goes to 10 or 15%, are they still going to be like, no, we're not going to print? They're going to print again. Come on. And honestly, I've never met an emotional investor who ended up making a lot of money long term, right? So that's the kicker. And just always remember that, folks, is that emotion is your worst enemy. You should never fall in love with anything. I mean, listen, a human, okay, fall in love with your significant other. But when it comes to investing, you have to be always very robotic, because inevitably, when you put all your eggs in a basket, maybe the first one works out, you make a fortune, but eventually you're going to hit one that's wrong, and you can't let that wipe you out. So, definitely, it's a scary thing. I always say to people, like, no investment that you're making is going to love you back. It is just an investment, right? I mean, no, you can't say Shiba Inu loves you. Yet, right. So why would you love it? Love something that can love you back, and no asset you're investing in is going to love you back. Yeah, no. So definitely diversifying among multiple assets is the main one. But I'm the same way. Like in my portfolios that I manage, it's about being long certain things, but also being short certain things. Like going into the stock split on Tesla, I was short going into this morning, right, and looking for that pullback. That you had this run up into that stock split that it had today, and then you just figure, okay, it's run up, it's going to sell off, and it did. And then I also had long positions in stocks as well to kind of compensate. And luckily, you get that drop, and then you get sometimes that pop in the other names as well. But if the market tanked, at least Tesla would drop, and maybe the others would drop, and it would kind of hedge your downside. So I think long short is the way to go. Some people use options. That's fine. I've never been a fan of that, because I always look at it like this, is like, if you're hedging with options, you're inevitably giving up some of your alpha, right? So, if you're batting, let's say you're batting 80% as a trader, so 8 out of every 10 you win. Why would you ever make it so that it turns out to be that you're only making 600 out of every $1,000 that you could do by hedging? So if you're right enough, I mean, listen, if you're a 50-50 trader, then yes, hedging's the way to go. If you have the skills, if you have the ability to read charts, then hedging with options to me doesn't make sense.
So, what are your thoughts about Bitcoin's performance in September? Will it go high or crash low? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.